Yes, very good afternoon, everyone. We'll wait for 2 minutes for other students to join, then we'll start. Okay, very good afternoon. What about wherever other students have gone? Any idea? In the first session, attendance was so good. What happened? Okay, let me share the screen. You have message to them. Fine. Let's see if they come. Okay, so actually we were about to start the topic in the previous session only, but we have solved the illustration and we were not able to begin with the new topic. In the previous session, we have only done with that illustration of hire purchase, I guess. So the next topic, I hope that hire purchase illustration was clear to everyone, the complete calculation, the journal entries, the accounting, everything. So our next topic is branch accounting. So this was the illustration on hire purchase we have done in the previous session. Okay. So today we're going to start with branch accounting. Now, when we talk about the business organizations, it's not necessary that the complete process, the complete system setup is being there at one place. You must have heard with, especially with respect to banks. Okay, head office being situated at one place. Okay, but the control and system is with respect to different branches spread all over. Okay, the branches of the banks are being situated at different places. Similarly, there are so many business operating at one place, but the complete business is operated with the help of the branches. Okay, the actual work is done in the branches. Okay, and head office is there at some another place. Under specifically those business we are talking about where now there is a necessity that you need to be near your customers. Okay, if you are far away from your customers, your business is not going to run. Okay, when you are indulged in any type of customization, and specifically with respect to provision of services, you are indulged in providing services to the customers. So it's very necessary for the organizations, for the businesses to be near to their customers. They can't be situated far away and providing services from them. Okay, so proximity is very necessary with that respect when you are providing the services. Now, when I say the branches are operating at different places. So at the end of the year, statements, financial statements. Now, organization is one. It's ABC Limited. Okay, headquarters is in Delhi. Branches are there in Chandigarh, in Mumbai, in other states as well. Okay, so but at the end of the year, what happens? The complete data with respect to all the branches have to be subsumed at the head office. They have to acquire the details. They have to gather the details from all the branches. Okay, and they have to prepare the final. They can't show that financial statements of headquarters, financial profit and loss account of Mumbai branch for the year. While presenting the financial statements, you can't say, you can't present 5 balance sheets. One is for the headquarters and 4 balance sheet are for the branches. No, that is needed to be prepared subsequently. Okay, one balance sheet is only prepared. So how you have to acquire details. Okay, usually whenever branch system is there now with respect to any business or service, what happens now? There are example ABC Limited. What ABC Limited do? They provide the goods to the, we can say, the branches. Okay, so whatever goods are sold by the Mumbai branch, from where they are getting the goods, headquarters give the good in the open market. The usual system which is followed under this is branch prepares their own account. Okay, they maintain their own accounts, how much goods they have received from the headquarters. Okay, how much sales they have done, how much cash sales they have done, how much credit sales they have done, how much debtors they have. Okay, and all this data is being compiled and being sent to the headquarters. Okay, so it becomes easy for the headquarters to acquire the data from all the branches and to compile them into the one financial statement. Okay, so this is what is being observed. Now, when I say that goods are sent from head office to the branch, after that branch sell the goods. Goods are sold at the branches, but they don't make the purchases. Obviously, the main purchases or manufacturing is done at the head office only. And head office only sends the goods to the branches, then branches sell them to the consumers. Okay. So when I say that headquarters deliver or they give the goods to the branches, so there are certain points to be considered. Now, say for example, in first scenario, we are assuming that assuming that headquarter is, and under that, and another scenario, we are saying that they are buying from some dealer or supplier. So there are two different aspects. Okay. Under one aspect, they are the own manufacturer, they are the producer. Goods are produced at the head office only. Okay. There is an attached production center where goods are produced and manufactured. Okay. So they are aware about the cost of the goods. Say for each product is produced at 100 rupees. So the cost price is 100. Head office is not going to add something and give the goods to the branches. They are not sitting there to earn the profit or to generate the revenue from the branches. Okay, they obviously they want to generate revenue from the consumers. So what they are doing when they are sending, when they are delivering the goods, okay, to the branches, they are making this transaction at the, but the selling price of the same product is 150 rupees. That means profit margin of 50. We are taking up very simple amounts over here for the purpose of just understanding the concept. Okay. So goods, when they are obviously, why would head office add some additional prices? They are not going to generate revenue from the branches. Okay. So at the cost price only, that is being transaction has been done. And now branches unit. Okay. And once the accounts are prepared by the branches and sent to the head office, what they will do? They will record accordingly. Okay. Selling price, they are going to record. They can easily segregate the profit margin because they are aware at what price the goods were given to them, 100 rupees, and they have sold for 150. That means per unit, they should have a profit of rupees 50. Okay. Under the another scenario, what we have assumed that head office is not producing something, but they are buying it from some another dealer. Okay. Now, when they will buy them, they will get the invoice. For example, they have bought from XYZ dealer. They have got the product for 120. There will be more advantage they can have with respect to the cost. But if they are buying from outside, they have to pay more. That is how the cycle supply chain goes on. Okay. If you are if you yourself are the manufacturer, then the cost price which you will be getting is obviously comparatively very less. But if you are buying the goods from outside, obviously you have to pay something extra. The product is same. If you will manufacture it by your own, it will cost you 100 rupees. But since you are buying it from outside, from some supplier or dealer, obviously in lump sum you are buying. Okay. So you're getting it for 120. Now, what is this 120? 120 is the invoice price. The price at which you are buying from outside. Now, when head office will transfer these goods, which they have brought from some dealer for 120 rupees, while transferring these goods to the branch, they are going to record the transaction at invoice price only, at invoice cost price for which they have bought. So they will transfer the goods to the head office at 120 each unit. Okay. Now, when the goods are sold, that will be that selling price will be determined either by the branch or by the head office, whatever system they are following. Okay. Sometimes it's being left up to the branches because since branches are operative at different places, okay, the market condition at different places are same. Now, neither the mindset of the customer. Okay. Same thing you can find in the Mumbai market for 100 rupees. Same thing you can find in some another state market for 200 rupees. Okay. It depends upon how much customer is ready to pay. So sometimes it is left at the option of the branches, how much maximum they can get from the customers. They are eligible to get that much. Or sometimes what happens, head office only fixes the price that you have to sell the product at this price only, not below this, not above this. So whatever being the dealing is there between head office and branch, that depends upon their own terms and conditions. But this is the systematic way through which the branch accounting is done. So branch themselves will prepare the accounts, they will maintain the accounts, and they will record each and every aspect of the transaction, how much goods they have got from the head office, at what price, okay, how much units have been sold by them, how much cash for how much credit, and credit will lead to the debtors. Obviously, when they are selling the goods on credit, they are going to raise certain debtors for them. Okay, so how many debtors are there? Okay, how much amount they have got from the debtors? Okay, amount received from the debtors. How much expenditure they have done? If the complete branch is being operative, so there will be so many expenditures. Okay, there will be rent, and there will be other small petty expenses also. So how many expenditure branches, and complete record is maintained, and it is being sent to the head office. And head office, what they can do, they can compile all the data and they can prepare it. They can prepare their final statements. So this is how the concept of branch accounting works. Okay, so starting with the introduction and objectives to branch accounting. Branch accounting is nothing, but it is also a bookkeeping system. Okay, but the difference is separate accounts are maintained for each branch. So each branch will be preparing their own accounts. Sometimes even the double system is being adopted. Branch also prepare their accounts, and head office also prepare the branch accounts. Okay, they individually prepare their own accounts also, head office accounts, and they prepare the branch accounts also. So at the end, when they get the data from the branches, they can make a tally. Obviously, each and every transaction is being recorded in that. So here accounts are maintained for each branch. For a number of branches, whatever are operative, for each branch, different accounts will be prepared, or operating location of the organization from where the organization is operating its actions, transactions. Typically found in geographically dispersed corporations, where we can say branches are being located not in the same city, but in different cities and different states. So they are geographically dispersed situation is there. So it is typically found when the branches are geographically dispersed with respect to multinational. Head office is in one country and branches are in different countries. And chain operators, it allows for greater transparency in the transactions, cash flows, and overall financial position and performance of each branch. Say, for example, if branches accounting is not done, each branch is not preparing their or keeping a hold over their own records and transactions, what will happen? Okay, if this is the situation, there will be no transparency. Everything is, say, for example, it's only recorded at the head office. No branch accounting is done. Okay, so it's not possible for the head office to make the appropriate account for each one. Okay, they can make it for their own reference purpose. Okay, but final will be done with whatever will be delivered by the branch accounts, because whatever expenditure they are doing, it's not necessary how the head office will be known. For each expenditure, say for example, you have spent 200 rupees now. You will call the head office and they will say, please record 200 rupees expenditure this and this branch. It's not possible to make them aware about each and every expenditure done at the branch. Head office will not be able to get hold over so many transactions at the same time. That is the reason individually you have to prepare your own. Okay, so it becomes easy for the head office to compile the complete data by themselves at the end of the financial year. Branch accounts also refer to record individually produced to show the performance of different location. It also helps the head office now to evaluate how their branches are operating. Okay, say for example, you have 5 different branches operative at 5 different places. A, B, C, D, and E are my 5 branches of my company. A is making a profit revenue of 80%. B is making revenue of 75%. C 76%. D say 70%, and E is making only profit of 40%. So I will be able to evaluate that D or E is the weakest branch I have. So what I will be doing, if it's economical correct, I will hold on. I will continue with that branch, or I will try to make certain changes in that branch so that their profit or their revenue will be increased. Or if it's not economically beneficial for me, I will close down that branch. Instead, I will open the new branch, which is obviously going to give me huge revenues as compared to this weak branch. Okay, so how each branch is operating, how each branch is performing, that can be evaluated easily with the help of this branch account. Because here accounts or records are maintained at the corporate headquarters. However, branch accounting usually refers to branches keeping their own books and later sending them to the head office to be combined with those of the other units. So at the end of the year, what my branches will do, all my 5 branches will send the data to me. This is our whole record for the whole year. What I will do, sorry, I will combine the data of all A, B, C, D, E. I'll combine all, I will get the aggregate data, and I'll combine my head office data also. And I can prepare a single financial statement for my organization. Okay, obviously there I will do the bifurcation, branch A, branch B, branch C. I will show it in my statement, in my balance sheet and profit and loss account. But single statement will be done. Single income statement, single balance sheet. There will be no 5 different balance sheets. That is the ultimate reason why branch accounting is done. So the main purpose or objectives includes to know about the cash position of the branch. Each branch will have a different cash position. Inventory level, how much stock each branch is holding. To know the profit and loss of the branch, how much profit is earned by each branch or how much loss is being incurred by them. It also helps to evaluate the performance of the staff. Obviously, whatever returns the branch is giving, we can evaluate. Say, for example, if any branch is giving their 95% of returns every year from the last 5 years. So I can say the employees working at that branch are quite efficient. Okay. So with respect to when I will determine and when I will think about the performance appraisal, my first priority will be with respect to A branch, since they are giving me huge returns. Apart from that, it helps to calculate commission amount payable at the sales staff on making cash sales. A lot of employees are being hired with respect to fixed pay plus incentives or plus commission on on number of units they are selling, specifically cash sales who are making. Okay, so if I have proper records of each branch, that under which branch, which staff or which salesperson is selling how many units on cash, so I can calculate the commission they are eligible to receive. After that, it also helps to recover against credit sales. If your branch is also involved in credit sales, they are selling the goods on credit basis, that means they are emerging new debtors. And obviously, you have to make the collection from the debtors. No debtor is going to come and say, take money from me. Okay, I am eligible to pay you this much of money. You have to make initiative to collect from the debtors. You have to make them calls. You have to send the reminders and make the procedure how to collect from the debtors. So all these things, all these purpose, all these objectives are fulfilled with respect to branch accounting. Now, there are 3 different methods by which you can branch accounting can be done. First one is known as the stock and debtors method. Okay, where you have to prepare separate certain accounts where you will be recording with respect to the stock of your branch and debtors. Because under this system, usually you are indulged in more number of credit sales as compared to the cash sales. So first method is stock and debtors method. The 2 other methods are also there, but we are here focusing basically on this method. Okay, the other 2 methods are just for the purpose of information. So stock and debtors method, first method, very important method, and which is being generally used. Most applicable method, we can say. So this system is generally used when the goods are sent to the branch at pro forma invoice price and the size of the branch is large. Okay, so why and when this method is used? This method is used when head office sends the branches their goods. So goods are sent from head office to branch. The size of the branch is quite large and the goods are sent at the invoice price. So under these circumstances, this system, which is known as stock and data system, is usually adopted. Under this system, the branch maintains few central accounts to exercise greater control over the branch stock and other related expenses. So whenever this system is adopted by the branches, these are some of the accounts which are prepared by each branch. They include branch stock account. Now, as the name suggests, what would be recorded in this account? Can anyone help me out with this? Can anyone tell me what will be recorded in this account? Name suggests branch stock account. Yes, what will be recorded? Sorry. Obviously, you are going to record about the stock, how much stock you have got from the head office at the beginning of the year and how much is being left at the end of the opening and closing. Then comes the data. When if you are indulge in credit sales, you have to maintain this account where you will be recording the opening balance of the data, the closing balance at the end of the year, how many datas you have, at the beginning, how much you have, and during the whole year, how much credit sales you have done. Obviously, credit sales will lead to the increase in the datas and how much collection you have done from the datas. So all these things are recorded. Then comes branch expenses, how much expenditure is done at individual branches. Branch adjustment account. Okay, in case of certain adjustment, if goods are being returned, okay, or there is some certain with respect to the income and expenditure that is being recorded. With respect to each account, the description is also given. We are going to just see it after this. Next is goods sent to branch. Okay, how much goods have been sent to the branch. Then branch stock reserve account. Now, what is recorded under each of this account that we are going to see? First, branch stock account. Now, what will be recorded in branch stock account? This account is on the pattern of stock account, normal stock account. The way we maintain that, similarly, this account is maintained. This account helps the head office in maintaining an effective control over the branch stock and tells about shortage and surplus in the branch stock. Okay, now you are operative in so many branches. Okay, you have to look after so many branches. You every day send something to some branch or other. So it's very difficult to remember now how much stock each individual branch have. So this account is maintained and it will help you to evaluate which branch is having how much stock. Now, what happens to sometimes you visit a shop and they can tell you that this product is currently out of stock. But if you are emphasizing on the same product, what they tell you in the usual scenario, the same product is available in their another branch. If we are ready to wait, they can make them available by tomorrow. So what they will do, okay, the branch in which the product is available, from that branch, they will transmit the product to the branch where requirement is there or where demand is there. Okay, so this way inter adjustment is done with respect to different branches also. So it will help the head office to evaluate whether there is a shortage or whether there is a surplus in the stock. Because of difference between pro forma invoice and the selling price. Now, pro forma invoice, I have already told you. Okay, from wherever the dealing is done and purchase is done, head office has done the purchases. So that will be recorded at the invoice price, the price at which the goods are transferred from head office to the branch. But the selling price will be completely different. Now I have got something from my head office for 200. I'm not going to sell it for 200. Then what will be the meaning? There will be no profit margin. Obviously, I'm going to sell it at 250 or 300. Okay. So the difference in the selling price and invoice price is there. Unlike traditional accounting practice, branch stock account is always maintained on the selling price or pro forma invoice price. Selling price is used to record the goods sold by the branch to its customer and goods returned by the branch customers. The rest of the information, that is opening, closing balances, they are recorded at the invoice price. Okay. Next is debtors account. Second account which is maintained over here, it is branch debtors accounts. What will be recorded in branch debtors account? It is maintained in the traditional manner to record transactions between branch and its credit customers. Credit customer refers to those customers to whom you are making the credit sales. They become your debtors. If you are making up the cash sales, there is no concept of debtors. You get the cash instantly. Next is branch expense account. Now, as the name suggests, the purpose of maintaining this account is nothing but to compile all branch expenses at one point. It will include all type of expenses such as cash-based and receivable-based. Next is branch adjustment account. Now, what is recorded in the branch adjustment account? Branch adjustment account replaces the branch income statement. Income statement, the another name for income statement is profit and loss account. This is the account in which all expenses and losses are closed along with the margin, that is a difference between cost and selling price. The difference is split into two. One is termed as the surplus, another that comes from the branch stock account, representing the difference between selling and invoice price. And the second is loading, that represents the difference between invoice price and cost. This loading is calculated on opening and closing stock and also on the net of the goods sent to the branch. Just as we have discussed that when the transfer happens, that when the goods are transferred from head office to the branch, that is usually done at the invoice price. But when selling is done, when goods are sold, it is done at the selling price. And there is a difference between these two prices. Okay, that is the selling price and the invoice price. That difference, say for example, invoice price is 150, selling price is 200. There is a difference of 50. That 50 rupees is being shown over here. Okay, that is under branch adjustment account. Next is goods sent to branch account. This is a supporting account which is maintained to show second effect of the goods sent to branch and goods returned from branch at invoice price. So how much goods you have got from the head office, how much goods you have returned it to the head office, all the transactions are shown under this account, which is known as goods sent to branch account. Okay. And the last one is branch stock reserve account. Now this is contra to branch stock account. In this account, opening and closing of loading on branch stock is maintained. Whatever difference you will be finding with respect to the opening and closing stock of goods which you have acquired or which you are going to dealt with at the end of the year with the head office, the difference between the invoice and the cost price, that is the selling price, okay, that is being represented over here, stock reserve account. Under stock account, you mention it as a which price you will mention? Invoice price. But there is a difference between invoice price and selling price. Where you will show that difference? You have got for 150. You have recorded at 150. But at this time of selling, you have shown 200 rupees. So there is a difference between 50 rupees. Where you will show that difference? That will be shown in the stock reserve account. Okay. So this is how basically these are the 6 different accounts. You will not be asked all the accounts to be prepared at the same time. Okay. One thing usually which is asked is to prepare the book accounts in the books of the head office. Okay. And for head office, you will be preparing the main branch account and any 1 or 2 accounts will be asked, whether you will be told to maintain the stock account or it will be expenditure account separately. Otherwise, you will show it in the common branch account. Okay, so branch, with respect to branch, these accounts are maintained. What will be the journal entries passed in the books of the head office? When transactions happens under branch accounting, what journal entries are passed in the books of the head office? For goods sent to branch at invoice price, you are sending the goods. Goods are transmitted from head office to branch at invoice. What will be the journal entry? It will be branch stock account debit, goods sent to branch account. For goods sold at branch, goods are sold not at the head office but at the branch. On what basis? On credit basis. So debtors will be raised. So what you will debit? You will debit branch debtors account. And what we will credit? It will be stock account. Because goods have reduced, now you have sold. So there will be a decrease in the goods. And this will be done at the selling price because the sale activity is done at the selling price, not at the invoice price. The transfer is done at the invoice price. Selling activity is done at the selling price. Next is for goods sold at branch for cash. Now account entry will remain same. It will be done at the selling price. Only the difference is you have debited debtors account. Now what you will debit? You will debit cash account. But you will, because you will receive no cash. When cash sales are done, what you debit usually in normal transactions, what you will debit? Cash or bank account. Okay. So here what you will debit? Branch cash account. Next is for cash received from debtors. You have received cash. So you'll be debiting cash, and what you will credit? You will credit the debtors account. So cash to debtors. But instead of writing cash to debtors, what you will write? Branch cash to branch debtors. So you just have to add the branch word. Because since the journal entries are passed in the books of head office, so with respect to all the entries, all the debits and credits, what you have to add? You have to add the word branch. Next, for goods returned by branch, it will be branch stock to branch debtors. For goods returned by branch to head office, goods sent to branch stock. For cash sent by the head office to the branch. Now here what is happening? Cash is remitted. Instead of good, what is remitted? Cash is remitted from branch to from head office to branch. So it will be branch expenses account debit to cash account. For bad debts, branch debtors to branch debtors. For shortage or shrinkage in branch stock, it will be branch adjustment to branch stock. For surplus, branch stock to branch adjustment. For closing of branch expenses, branch adjustment to branch expenses. For transfer of opening stock into the branch adjustment, branch stock reserve account debit to branch adjustment account. For creating stock reserve on closing balance, adjustment to stock. For loading on net amount of goods sent to branch account debit to branch adjustment. Now your adjustment account is used. Why? Because you are doing at the for loading of net amount. That loading refers to the difference between the invoice and the selling price. For closing the branch adjustment account debit to profit and loss account. But at the end, this account will give you either the profit or the loss. Okay, so these will be the journal entries which will be passed in the books of the head office. So this is how the treatment has been done when you follow debtors and stock account. First method of accounting, branch accounting. First method, stock and debtors method. Under that method, these journal entries are passed. Next is final account system. Now, as the name suggests, what must be done over here? Okay. Final accounts, what we do in final accounts, we prepare trading account, we prepare profit and loss account, and we prepare balance sheet. So as the name suggests, second method is final accounts method. So what you will be doing over here, you will be preparing trading and profit and loss account. Simple. So under this system, trading and profit and loss account is prepared to calculate gross profit or gross lot, net profit or net loss. The opening stock and goods sent to branch is debited in the trading account. Closing stock, sales and goods returned by the branch is credited on the trading account. Normal rules will be applicable with respect to trading account, profit and loss account. Okay, whatever general rules are there, the same rules will be applicable over here. There is no need to maintain the separate adjustment reserve and stock account. Simple trading and profit and loss account, this is the second method. But usually this is not adopted because here you don't get a clear idea about the invoice price. There is no mention about the invoice price. There is no mention about the selling price. There is no mention about the surplus. There is no mention about the loading price. Okay, so you don't get a clarity. So this system is usually not followed. Which system is followed? First system, debtors and stock system. That is 99.99% followed by the branch accounting. The third method is also given to us, that this is only for the information purpose also. This method is also not adopted by the branch accounting. Wholesale price system. Under this system, the goods are invoiced at the wholesale price to a retail branch. Opening stock and closing stock of branch will be shown at the opening wholesale price, and unrealized profit in the closing stock will be debited at the stock reserve to profit and loss account of head office. Here what happens, whatever profit margin, whatever difference in the value is there, that is recorded at the head office. Branch is not aware about the loading price, what at the invoice price, whatever is the selling price. They only sell the goods at the predetermined price, which is mentioned by the head office. The calculation with respect to unrealized profits, surplus, everything is done at the head office. Similarly, the stock reserve of opening stock will be credited to profit and loss account of head office. So all the adjustments over here are done at the head office. Now for a head office to maintain the reserves account for such so many number of branches is quite a headache. That is the reason this system is also not adopted, because it has number of loopholes in it. So this is also not adopted, what method is adopted is known as the first system, that is debtors and stock system. That is the thing which is adopted. Okay. Okay, this will be all for today. We have one illustration with respect to branch accounting. That illustration we are going to solve in the next session. I can show you. This is the illustration where the certain adjustment entries are given. Okay. Stocks, opening stock, closing stocks, and with respect to sales amounts are given. We have to prepare the branch account. So how that is prepared, we are going to see in the next session. Okay, then that will be all for today. Thank you so much, everyone, for joining. See you all in the next session. Till then, bye. Have a nice day and take care. Is any doubts with respect to today's session? Okay, then. Thanks for joining. See you in the next session. Yes. What question?